The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. Let me just go through this right away, and I wanted to show you how these cup formations have been unbelievable in the last, I'd say in the last 6 weeks or so. The rallies in the E-mini go up, and then they make this cup formation and then break out up, and they make a cup formation, and then retest the left side high. If it breaks out, that's really important, but very often it just goes right there, and then it pulls back and takes a long time going sideways in this rectangle formation. So 40.20 is the number to look at here in the E-mini, trading at 40.1675 right now. If at any point, I'd said earlier, I typed into the den, it's 4,010. Now, that's the number that I'm looking at. If the E-mini is able to trade for over 20 minutes, I'd said by 10:20, for over 20 minutes above the 40.10 level, that would be a really good sign and say that you're raising the base of support. Hey, the day's young. There are a lot of pieces of information. The market liked the earlier news on the continuing jobless claims. We'll just see. There's that test, and now it's starting to pull back. Isn't it funny how that happens? All right, let's get back to the story. Here we go. Looking at the overall market, I had said just now, let me expand this so that you can see what I'm talking about. Yesterday, there was yet another Roman candle. There was a Roman candle on. I made a big deal about it. That's how we went long before, when it was a Roman candle on the 24th. It went above that high, and within 2 bars, it tested halfway into the wick. And that said it should test the low. It tested the low. Following day, made a doji candle of 32,500. That was Wednesday, a week ago. And we grabbed a long position for just a trading position, 3 times long on the Dow. Ran it all the way up, took profits on the way, and then got stopped out for a smaller gain on the core position, although we had really nice gains on the others. And then we got back in yesterday at the low. Now, this is just a trading position. And the reason why we've gone to the 3 times long is that the Dow has been doing very well. In a sense, except for that period that it went sideways for about 3-4 weeks, as it went from the that big move up in January, and then it stalled. If it's able to garner that kind of momentum again, if the market has, it'll be the Dow that probably participates very nicely. So it's just an experiment. We've got to raise our stop. We almost got to a level where we could actually raise the stop even more. We'll see what happens. And the reason why I'm mentioning this is because then we had another red Chapman wave Roman candle right there. And not a perfect one, but very close. And my reasoning here was, if at any point during the day we trade for over 60 minutes below 32,700, there's a real good chance we'll test the low of yesterday. Days young, anything can happen because we've still got a really important earning. Is that a jobless number tomorrow? Anyway, a very important number that relates to what the Fed is going to be able to do. And within that context, you can see the pink 9-period moving average in the Dow is still negative. It's under the 14. The MACD is improving a lot, but still negative. Stochastic is quite weak at 32%. So it's a big ask. It's just patterns that I'm looking at that, if they repeat, should see a push towards the pink 9-period moving average above the 200-period moving average of 33,012. If we're able to do that, we've already tried once today. We got to almost there at 32,990. So it's a big ask. I'm asking the market, under these conditions, when you've got the S, let me go through the others at the same time. The S&P, which has given back some of the gain, is up 18 at 4,009, did in 4,017. The cash, it still isn't even above it tried to go above the 14-period moving average, which is above the pink 9 and above the 200. This conglomeration of these moving averages says you've got a magnet that's if there's a pullback, you should try to come back here. If there's a rally, you've got to break away sharply from this level to unlock the magnetism of drawing the price into the 4008 level. So this is very important. And within the context of the weekly chart, yeah, we're still stuck in the rectangle formation, but so far we're remaining outside the inside track repellent zone. That's these two trend lines to the downside. Looking at the QQQ, a little different chart because it's very close to touching the outside band of the falling axe and the Chapman wave inside track repellent zone. So far today, the 9 has crossed over the 14 and is pushing away from the 200 period moving average. But there's a lot of selling pressure as well as these sudden bursts of buying. So I'm not sanguine at all. I'm keeping my foot hovering over the accelerator. We do have one position in the I do have one position in the my newsletter in the opening call in my Traders Corner section that is ready to put on a short position, a rather aggressive short position, if these things don't work out the next couple of days. So now what we've got is the QQQs are actually leading up 2.3%. Dow's only up 0.21. S&P is up 0.32%. So this is a good sign because it was lagging badly for a couple of days. And you can see the weekly chart is improving a lot. Now, the problem here is the IWM, the Russell 2000, fading, down 58 cents at 186.03. Made this dreaded H pattern, took out the left side low yesterday, trying to get back above it. Whew, this is not good. But the weekly chart isn't that bad. It's not great, but it's not that bad. All right, I need to go to the SMHs because this is the clue. SMH is very strong, up 2.61 at 248.99, testing that Chapman wave inside track repellent zone. To me, this is a very good sign. Now, I get questions all the time about stocks that have earnings, stocks that don't already have earnings. Look at this. If you go to NVIDIA, which was at the 100 level, 108.12 back in October, is trading at a recovery high of 244. I would say 140 or 130, say, points above the 108. It's over 50. It was about a 56% gain. No, I'm sorry, what did I say? It's 100% gain. So 102 or so percent gain. That's very good. And when you've got a stock like GE, which I've loved for a long time, although we don't own it, the reason being I wanted to buy just before it did the split to buy a GE. And then I thought, oh, man, I got all that bookkeeping stuff to do for my subscribers. What a dumb thing that was. Look, here's GE. It was trading at 46.77 back in July. When was it? It was the beginning of the year, end of the year, I think it was, where you got the split and it went to GEHC. Part of it was GE, part of it now is GEHC, GE Healthcare Inc. spin-off of GE. Look at this. It had a low in the 50s and it's trading now at 77. So both of them have done absolutely fabulously. So you can mix in your portfolios, you can mix stocks that have very high beta, high PEs, and you can have stocks that are like GE, just coming back very nicely. So within that context, I want you to get to gold, looking at the H pattern that has a chance to make a cup formation. So this is very good because I said if the dollar makes this leg E, which we were expecting in the Chapman wave methodology, and then pulls back, that could help gold.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, so let me just go through this again. In the Chapman methodology, we like to identify the lowest bar, and then if after leg A up is established as a pullback and leg B is starting to improve very strongly, there's a good chance that it's going to be upgraded from a buy signal to a buy mode, especially if the technicals are confirming that rally. And especially in this particular case of the dollar, where you've got a Chapman wave squash, where the stochastic and the price move up so strongly and the MACD has gone already positive, that says you can go very quickly to peak A, to peak B, peak C, and then take a little time as the torque of the stochastic hands it over to the MACD, the moving average convergence divergence, to get you to D, which is exactly what it did. Not only that, I had drawn in a price time with a plumb line that wasn't exactly in the middle. I'd used the time sequence right here from the high that was made in the dollar index on the 6th of January at 105.63. The low at the exact plumb line would have been right here, but you can see that would have worked okay, but it would have just missed it. I decided to move to this candle, the peak A candle. So the low of 100.82 on the 3rd of February, I used an extension to the right for my plumb line, and it took us to the exact day. Yesterday was the high in leg D, and today is a peak D if there's no new recovery high. And what do you have? You have left side high of, what did I say, 105.60 something, yeah, 63. And this high right here from yesterday is 105.88, so within 25 cents. And now I think you can pull back a little bit, but the technicals are all very strong. So it might mean from that candle that from 2 days ago, the very strong candle, that you're really forming some kind of a digestive phase in the daily chart, and the weekly chart had a very strong leg A, but the technical aspect of the weekly is still not that strong. And that said to me, and I almost went along the GDX this morning, because I thought that's the exact scenario I was talking about yesterday, that the dollar goes to a new high, a recovery high that is, in leg D, and then pulls back because it's been a bit of a strain and a bit of a struggle, and that's going to help gold. But I don't see gold actually I don't see this as being the move for the big move up, and therefore that tells me the dollar is going to hold okay for a little while. And the reasoning for that is if you look at silver, and they do go together most of the time, silver's had a whopper. I mean, I love the little candle at the close yesterday in a trough G in silver, trading at 20.31, up 15 cents. But that weekly chart is just terrible, and the monthly chart is not very good. So this I can just see as a bounce. I meant to tell you, I'm sorry. Gold was up $17 at 18.35. They're hitting both the 200-period moving average, the pink 9-period moving average, and trying to get to the 1841 level on the continuous contract for the 14-period exponential moving average. But you can see how the MACD flattened out is positive, but it's not showing momentum. And the stochastic, which is your torque, giving you that initial thrust, has started to pull back sharply. So I just see this as a very nice bounce. Maybe a quick trade for those of you trading. I just don't, maybe I'm wrong, but I don't see the technicals giving me. There's a chance, yes, there is a chance that you can go from the dreaded H, the lowercase h pattern, so far successful because it hasn't taken out the left side low, to a cup formation, but you really need the technicals to be already on the way up, and so far that's a big question. So that's on the gold, and the GDX is the same thing, a little bit worse. It's really acting quite poorly. The low that was made, now this is fascinating how you can make these double bottoms at exactly the price or within pennies. Look at this, trough D on the 24th of Feb at 26.64. Yesterday's low was 26.68. 4 cents higher. Hasn't made a leg E yet. So this says, yep, you can bounce. But at this point, I'm thinking of it more as a rectangle that's making an arch formation. It should do a retest of the 26s at some point soon. All right, now let's go into high-grade copper. High-grade copper in the lower range. Crude oil in the lower range. Yep, in the lower range. And look at the weekly chart. It says, hey, just this rectangle says, there could be one pop to the upside, but if at any point after that it comes back, in fact, I'll say it right now, if there is a weekly close below 77.40, 77.20, there's a very good chance it's going to make a quick run to test the low of 70.80 made the week of the 16th of December. But my thinking here is that there's just enough room to maybe try to get to the 84s one more time, and then we'll see what happens. So sideways for crude oil for a little bit longer. A question came in about the TLT. Could you please go over it again? We spoke about the 99s, exactly what's the importance. Yeah, so TLT, which is the, is there a trade? Oh, sorry, I didn't see that. iShares 20-year Treasury bond fund has a high at 179 back in March of 2020. It drops very sharply. It comes all the way down to the 99 level. And let me show you something very interesting. Actually, it went down to 90. The exact price I should have put in was 91.85. So that was 91.85. I think it was in October of last year, 1.85. Okay, but that 99 level has been sacred. It just hasn't wanted to break it over the past, since it broke above it, starting in, was that November or December? December, the week of the 2nd. 101 was the low, and then it spiked up to 109.68, pulls back, retests 109.35. I mean, the way these things work is just amazing. And then it comes back down. So this 19, let me just open this up for the daily chart. I was looking at the weekly in the middle. So daily on the left, weekly in the middle, monthly on the right. And lo and behold, what do we have? We have this 1, 2, 3 times tested, almost 4 times tested the 99 level. We actually broke under it right here at 98.88. We did go below 99. So this is this rally here in the TLT. That's bonds. If you put it together with the TNX, look at this. It means that that sideways range that after the peak D that was made in the 10-year yield, right here, this I'm going to put in a rectangle right here to show you that yes, it's an island reversal, but anything that trades overseas first before us is going to have some kind of a gap. You see that in gold stocks all the time. Yeah, this is what I'm thinking. We're stuck in this range. I don't think we're breaking out to the upside in the yields. I do think there's a chance that we retest the 39.27 level, 3.927. We're at 3.962 right now. Okay, just that's the way I'm looking at it at this particular point. So I wanted to also show you the USD JPY. This is now, I should have done that when I did the dollar. So this is a G/C. Very often the G/C says after an instant restart, you could get another little pop to go to D, but you've got a left side, right side price time match. There's the plumb line, not from the low, but 3 bars later. And we did it exactly. We went right there. Boop. We went to test that high, and that high was at 138 in the 138 area. And yesterday's high was 137.91. How close is that? So yes, the technicals are still good, but I'm just saying there's a good chance we go into a trading band right now. And in the EUR USD, as we go to the break, the Dow's up 49, giving back a big chunk, and the SP's up 8. You're on the 200-period moving average. I'll be back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So we're watching this level now at 4,000 in the E-mini. Let's see. I think we did everything that we wanted to see. In the morning, it held, and then it broke this midpoint. You remember yesterday we were talking about this I wonder if I can squeeze it in. Oh, I can show you in the, let me just see. Squeeze, squeeze, squeeze. There we go. Oh, the wrong one. This one. Squeeze, squeeze, squeeze. Yeah, look at that. So you remember we were looking at this it's a 1-minute chart, so I'm going to have to go back quite a bit. We were looking at the midpoint of it was right there. Yeah, we were looking at the midpoint of the trend line in this little mini rectangle, and it doesn't look like a long time now, but it lasted for over 30 minutes, and then it went sideways. So I kept that line. Sometimes I like to keep a line, just like when I used to hand chart, I would find sometimes years later a trend line that I had drawn that was still active. All right, so what we're looking at here, I didn't do that. Okay, so within that context, that made the 39.89 really important support all day. This 39.89 level is going to be key support. We've been under it, but now we've been above it. And what I said is, if we can hold above 40.10 for 20 minutes or more before 10.20, that'll start to raise the base of support. Well, we did that for about 27 minutes there. It was about 26 minutes, and then it broke down decisively below the level of support that we're looking at, 40.10. And now it's gone all the way to 4,000 and is trying to rally. So I'm watching this very closely because remember we're talking about the peak D, the fourth highest peak in the Chapman wave. That's the objective to get you to. Well, in the E-mini, the 10-minute chart did go to that peak D where we were making that little double top, and that pulled back quite sharply. So now we're going to see, remember, I like to look at the market as phases. Sometimes it's time, but really it's a feel. You can get a feel for the phases. We had that early morning phase. Actually, it was holding very nicely, and then we had a sharp drop. Then we had the rally into the 8:30 time frame. Then we had the 8:30 spike. Then we had the 9:30 to 10 o'clock spike. Then we had the pullback after 10 going to this 10:20-ish area. Now comes the real market. Now you've got the people who have already decided what's working, what's not working. Now it's time to put some money to work. We've been through that opening phase. I know Larry Pesavento, who did a great workshop yesterday. Larry talks about amateurs. But I think there's been a huge change for about a year and a half now. I've been seeing a two-click trade so often. Look, if you got at 6 o'clock, if you got that low that hit this trend line, I didn't do it. I did a little later on and then got out. But if you have a two-click trade and that stop can hold with a test of the H pattern, there's a chance sometimes that you can hold one position. It doesn't matter how many or whatever it is. I'm just saying one click, and you can hold it into the afternoon, sometimes even into the close. And that's on the downside. Yesterday was very much looking like, it was the day before, looking like a two-click session to the downside. So I like to think to make it as simple as possible, if you're able to think in terms of a two-click because you feel confident enough that there's a chance that if everything works out into that mid-session, and that takes you to about 12 o'clock and then restarts at about 1:30, that's going to be very good because then that afternoon session gets broken up into phases as well. So I'm looking at this and saying there is a really good chance that not today, but this could be a good session going into the close from the base this morning. Today there's a problem because you've got that report coming up tomorrow early morning. I might be wrong, but I think there will be some selling going into the close because you're taking a bit of a risk. Okay, within that context, let's get out of this. I've spoken about the bonds. I've spoken about crude oil. It's just stuck in a range, in the lower range. Now, this is going to be quite important for me. So I wanted to go through, let's just go through the A's. AMZ, Amazon. This is going to be a very important phase in March because the spectacular run going from the 81 level all the way to over 100 to about 114, right to the 200-period exponential moving average, and then having a pretty decent pullback, says if Amazon is able to get another, let's put it this way, I'm not going to call it a breather. No, if Amazon is able to use, let's just for the moment imagine that 5 days ago, the low that was made on the 2nd of March of 90.39 becomes a fulcrum for the move up. The only way that could work is if by next week, Thursday to Friday, I could give it a little longer, but I'm going to say, let's say next week, Thursday to Friday, it's at least at 94 right now, it's at least attempting to test the high of the 15th of February and that was a high of 101.17. Now, why do I say that? Because that eyelid reversal and that high that was made at the very beginning of February, and then the way down, that pyramid formation, has started to see this huge candle, beautiful green candle of the 25th of January from 91.52 to 97.24. It's starting to test that, and if it can start to move above it, that was with, if I remember correctly, that was with very big volume, 94 million. Yes, that was a very big volume, maybe a third more than what was normal in that particular phase. So that says if we're able to close above it, I've got numbers here, but I'm just for the moment going to skip those. If we can close above all these candles with a high of the 22nd of February going to 97.01, that'll be very important, because then I can start to draw in. I'll do it now, just as a preparation, but I could be wrong. I could draw in the cup formation. And this cup formation becomes very important because, look, the histogram of the MACD is improving. The MACD is very close to crossing positive. That's a big deal. The stochastic's lousy, but is rallying. The on-balance volume is not that good. The relative strength is really improving a lot. And the 9 has a long way to go to get over the 14. And therefore, I'm telling you what the work is. It's got to get to the 98 by Friday. Today's Thursday. By Friday or Monday, it's got to be testing maybe the 98s rather than 94, because if it hits 94, it is stuck for a while. That's Amazon. Look at Apple. Now, Apple's a little different because Apple has had this consolidation to the upside. It has a daily inside track repellent zone. And I have to tell you something. From my eye, I believe that this is a fulcrum right here, the week of the 6th of January, where I'm starting to see the 9-period moving average improving for a few weeks. The MACD is improving a lot. The stochastic's finally at 78%, trying to test the 80% level. I do not ever like the stochastic to pop over 80% for 3 or 4 bars and then go under. That is terrible. And the weekly chart has this falling axe formation, just like the weekly chart and the monthly chart is very important, because if at any point there is a close in Apple in March. I'm putting it in March. It's really important. You need speed. I don't want to take too much time. A close above 165. That says that Apple probably has turned the corner in terms of seeing a fulcrum here and could go higher, maybe into early April, and then we have to test to see what happens. Will that monthly chart break into the 165 on a closing basis for Apple? I'll be back. Dow's up 105, 145.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi folks, so this is Apple. So these are quite important stocks. Oh, yeah, okay, question came in. But I just showed that chart again. This is the E-mini chart. I do this all day when I'm in front of the computer either. I'm trading it or I'm not trading. It doesn't matter. I like to notate because you're always learning about the characteristic of the market at that particular phase. Yeah, I've got a chance that by 1047, the left side high, not the high that was made at 1007, but the high with the big red candle of 4,017.25 could be hit based on the Chapman methodology of bar symmetry, a cup formation. It's actually a lopsided cup formation. It's more like a gravy cup. If I drew it to the point that I used as the fulcrum, the little doji candle there. And this weekly chart made that peak D. This is a really good rebound. Look how strong the 9-period moving average is over the 14. That doesn't mean to say it's going to get there. It's just I'm just telling you that it's very strong. And look at the MACD with the M-shaped formation. So it says there's a chance that it makes that high and then it pulls back again. But the stochastic at 76% in the 10-minute chart says, ooh, you're going to have to use the shorter time frames because that's very important. All right, I'll be back in a moment to that. We'll check it out. In the meantime, let's just see this. So I want you to look at. So look at this. We're looking at. So the question came in. Where was it? Could I look at the XLE? So the XLE, I've done this almost daily now for quite some time. I see it in this rectangle that looks like the lowercase h. And do I have to do that? Yes, I do. So there's a pattern. There are 3 patterns that I look at all the time. And that is straight line, the straight line up or down, the cup formation, and the arch. Then there's a mix of 1 and 2 or 1 and 3. But if in the H pattern you can make this big rectangle, and within a peak A or a B, you start to break down, you take out that left side low, be careful, be very careful. Why? Because it means there's a chance you can continue to go lower. Look at the daily chart. Peak A to B to C breaks down. Usually it's B, that A or B where it turns down. But look at this. And then it takes out the left side low in 3 bars. It couldn't close above that left side high of early Feb. Now it's doing exactly the same thing. But it hasn't broken down. The MACD is a little bit better, is holding better than it did that time. And the stochastic's flat at 49%. So I'll put this in because there are always 2 fighting patterns. But if you look at this weekly chart, there's your dreaded H, right? There's your rectangle and went all the way to the top and comes back. And it keeps testing it. So it's basically stuck. I would just say the XLE, I would consider it just stuck with a low of key support of 82.65 and probably resistance is somewhere around 88 and it's at 85.67 right now. So just keep that in mind. Nothing wrong with it in the weekly or monthly. I wouldn't be shorting it. I'm just saying it isn't. It's having a good hiatus after a fabulous run. Next question came in. Could you look at you haven't looked at the P? Don says you haven't looked at the PPA or PPH for a long time. The PPA That's select, and that's Invesco Aerospace and Defense portfolio. Look at this. When you have a peak E, then you get the cup formation. We just saw that in the 1 minute chart, and then you get a left side, right side test. There's a chance that it's going to pull back a little bit. And look at this. There you are. There's a doji candle at a peak. I'm calling it an F for now. I can change that. But look what's happened. The technicals here around about the 14th or so of February were very strong. But look how weak they are here. But they're not breaking down, but they're much weaker. And the 9 is still over the 14. So I'm just going to say to you, I would draw this in for this is a leg F, unless it's unless I can change it. 1, 2, 3. No, it's on an instant restart. This is an F for now and a leg D in the monthly chart. So I'm just going to say, if you look at this cup formation, breaking to a slightly higher high with weaker technicals, it's just digesting these gains. So I'm going to draw in right here this rectangle formation and say, I think it's just stuck here for a while. I don't think the PPA right at this moment is going to break to the 83s. It needs a little bit more of a rest. What was it? A PPH. That's the that's not the biotech. That's the Van Eck Vectors Pharmaceutical. So that made a very sharp pullback under the 200 period moving average. This looks much weaker. Let me put it together with the IBB. So the IBB, keep your eye on the monthly chart. Oh, IBB is way weaker than the pharmaceuticals. I forgot. I looked at this recently, and then I forgot to check it out again. Look at this. Yeah, pharmaceuticals, the IBB is under the 200 period moving average, but the PPH, that's the ETF, is holding. It is arching over in the weekly chart, and the monthly chart is arching over, but I think it's more stuck in a range. It's at 75. I think the 76s is a very strong resistance, and it might have to test the 74s to 73s. So it's just in a digestive phase. Next question I had was, where did it go? Oh, thank you for the XLF. Oh, I meant to yesterday talk about it. I showed it, but I didn't talk about it. The XLF is a SPDR, Select Financial SPDR S&P fund. Look, there's an arch formation in the monthly chart. Here's your arch formation in the weekly chart. It's having trouble. And here's your huge arch formation in the daily. I'm a little nervous about the XLF. I like the XLF to be participating. It doesn't have to be leading. And yes, participating on the downside. That to me is a cautionary step. Did I see a question here? Just let me go. Oh, there was a question on a stock, and I didn't get to it. So, wait a minute. Where was that? Oh, could I look at the E-mini again? Yeah. So let me just say that there's your test of the left side low of the 19th of January of 34.56. Today's low is 34.63. I'm not happy about this. So this is when I talk about a bifurcated market, this is a split personality. You've got for instance, we have certain sectors that we've waited and waited to get. They're actually holding very well. Some are doing very nicely, but basically holding well. But I'm afraid to go into some other sectors because it's hazardous to your health and wealth. So the question came in, could I look at the E-mini now? I typed it in. Oh, it's almost there. There's your leg D. So what's the objective is to get your leg D, and this 9 is still holding very nicely above the 14, and you've gotten to a leg D in the 1 minute chart. That peak D in the 10 is still something that's outstanding there, waiting to see if it can go to an E above the high of 4,019.75. But this has, and I always put a little plus sign above a D to say a target reached, because the objective is to get you from a buy signal to a buy mode, meaning you should go to at least a D. So there it is. But it's made the D under the previous high. I'm not happy with that. So that says you might stall a little bit here, digesting all these gains. Fabulous rally from under 4,000 to 4,015. I mean, that's pretty good. All right. Oh, break coming up. And then there are a couple of questions I do need to get to. Where was TRMB? Thank you for reminding me. TRMB. I'll do TRMB in a moment because there's quite a bit to talk about there. I'll be back looking at what is TRMB. I know I've looked at it over the years. I just don't know.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, I might spend a little bit more time on this if I remember tomorrow, which is TRMB trading at 51.30 up 21 cents. Trimble Navigation Limited. So there's a beautiful left side, right side price time match from the November high comes down, a nice candle, and then the silent doji candle, Chapman Wave silent doji candle the day after the low, and then runs up to a peak G in exactly the time frame with the Chapman Wave inside wedge target resistance line, and then it comes back down. And now it's doing a left side, right side price time match. This is the symmetry right there. Right there. And this must hold. If it doesn't hold in this cluster on the left, I would say if it doesn't hold the 50 area, make it 50. If it closes under 50, you got to be prepared that it could go to the 48 level. I'm not sure this is the move that's taking it down to the low that was made in December, but I do think that it's got a bit of a problem here. But at this exact moment, this is the first time it's looking at support in the daily chart for the past 4 or 5 days. It had support a week or two ago in the 51 area. It failed it. It ran up to 54 and then gapped down. So yes, I'm looking. I can't remember what the question was, but anyway, that's what I'm looking at It's looking very weak, and the weekly is looking very weak. All right, we're about to wrap up. I'm going to hand you over to Steve Rhodes. Should be a wonderful show as always with Steve. Don't forget, we've got a great program here. We start at 9 o'clock with Tommy O'Brien, his morning market kickoff. Fabulous show. So we're looking at, I'll give you this right now, these big spurts to the upside that give a lot back. I don't want that. I don't like that. It's just biding time for tomorrow. So what we're looking at is the report tomorrow must allow, again, like today, some upside momentum rather than an immediate whoosh to the downside with the Dow going below 32,600. That to me is critical right now. Very short term, I would like to see a retest. I'd like to see a test of 33,100 by Monday. We'll see if that's going to happen. Have a wonderful rest of the day. I will see you tomorrow. Check out my opening full daily newsletter. Thank you.